What's up YouTube, it's Todd Horst here with Tasty Tracker. I did one position today in the small account challenge. You can see right now the account's already down to 1913. Typically when I open up a new position I expect it to go against me for the first day or two or three before we start to break even a little bit. And a lot of times that's not an actual negative, it's not actually down, that's just what the brokers are calculating that the spread would sell for if you were to open up a new one. So whether or not that would actually fill could be debated. So today the market was down generally speaking, so we'll go over here to SPY. I'm comforted a bit that it held at 310. Even if it goes down to 309.55, to me that is still holding at 310. I was a little concerned about how quickly it jumped up to 312, so I think we're going to have to hold off in this area for a couple days while the market sort of catches up with itself. But because today was overall a down day, I decided to enter in a position. Also my weakest position for July, was Microsoft. So typically I wouldn't put 1,000 towards one ticker. But I'm actually very bullish on Microsoft, which is surprising. If you asked me 10 years ago, working in tech, I would have never been bullish on Microsoft, but times have changed, and so I really like them as a company and where they're going. So right now the stock is sitting at 182. The original position I had was 185, 190, so I needed it to be above 190 to get full profit on that at close. So there's still 43 days to expiration, so I'm not concerned about this position, but I went ahead and opened up a spread below it at the next strikes, which would be 180, 175, to help hedge that position, and that's definitely not the right word. Hedging typically would be to cover the other side. This would, I would classify more as a laddered entry or averaging down, but instead of getting a better price on the 190, 185, I went with better strikes at 180, 175. So if we unselect everything here and then just go with Microsoft, now you can see, had I not put this position on, we would be, that's what the profit loss diagram would look like, and with it on, it minimizes the loss if it were to stick at its current position. So my plan here is to actually take off 50% of the combined position. So that's really easy to figure out in Tastyworks because you select each leg, here we go, and then you click close at 50. Loading, and then I always go down $1 because they usually round it up and I like to round it down. But anyway, so 183 is the combined position, and here we can see again that we have the two spreads back to back. Now I put this on a little too early in the day. Let me go back to the fill time here. Okay, so that was at 9:59 I put it on. That was actually when the market was starting to turn positive for the day. Certainly if I would have put it on down in here, that would have been a much better fill. And even with where we're at right now, I'm technically down, what was it, 32 bucks? 32.50. So definitely you could get a better fill on this, or again go down to the 170, 175 strikes maybe. Instead of 175, 180. So yeah, so what I'll try to do is close this entire position off for 50% off the combined position, which will look something like this, these lower strikes closing at 75% profit and the higher strikes closing at 25% profit, if you want to think about it that way. And again, typically this isn't a good idea, especially on a small account, because you don't want to allocate that much towards one ticker. Right now, if Microsoft dropped through the floor, I would be in some pain because I would lose all the collateral that I have associated with this account. So anyway, Yeah, a couple things there. Again, just to reiterate, it was a down day, and I'm long on the market, so there's no surprise that my account's down. Also, it's expected that when you open a position, it will go against you for the first couple days. This is the cycle that selling premium goes through. And these are both for the same expiration, July. I wanted to complement this position, and so going further out, I could have gotten even better strikes to keep it at the 40-ish% in the money. However, I wanted to use theta, be a little bit more aggressive with theta. And we can see right now it's sitting at a 45%. I think, like I said, since I put it on when I was higher, I think it was like a 40% or something like that, 41% when I had put it on. But anyway, that's it for today, and I'll talk to you next time.